How concerned are you about what's going on with this few bits and bobs of data turning down in the US? Does it presage something which the markets are interpreting as ever as perhaps being the worst scenario?
I would say that I think that the market is exaggerating, it's overreacting a little bit. But I'd also say that last month, the market probably priced in too much for stabilization in growth. They read too much into some of that data and suggested that the global slowdown had already hit its bottom. We have our concerns about the manufacturing sector, and certainly it seems as if there's a lot of excuses about some of the weak data. There is a trend going on that there is a manufacturing slowdown underway. It's still there. Having said all of that, we do see that by the end of this year, or at least early next year, we should see that trough in the global slowdown and see some kind of stabilization going into 2020.
Seema, does it worry you about this recent ruling against Airbus and how it's affecting EU-US relations? And, of course, we've got another ruling coming up in a few months on Boeing here. The thing is, could this be the start of a new front in the trade war?
I mean, that's really a major concern for investors. It's one of the things that we've been flagging as a potential risk for Europe for some time. Now, unfortunately for Europe, given that they are experiencing very weak growth, Germany on the cusp of recession, potentially spreading to the rest of Europe, it really can ill afford trade tensions now being directed towards them. So I think this is a real concern for us. We would hope that it ends quite quickly. For us, the other thing that we'll be watching out for is, does this turn to automakers? Because we already know that the German car industry is already in deep structural decline, and they really can ill afford any further tariffs from the US on that part of the economy.
And Seema, it's Juliette here in Singapore. What does it mean more broadly for equities? I have a chart on my terminal showing that we are seeing the S&P 500 back down on its 50-day moving average on this bearish momentum. You think US equities are going to remain fairly range-bound?
Yeah, that's right. We don't see recession for 2020. Certainly the risks have increased, but it's not our main scenario. Now, there are a number of geopolitical risks out there that investors need to take risk of. We believe that US equities are unlikely to stage a very significant return from here. But given that growth should ultimately stabilize, we think there is some space there. And on top of that, buyers are a lot of investors really do want to put their money to work. They're going to be looking for any opportunity to buy on the dip. So we think that there could be some movement back into equities anytime that you do see a slight correction coming through.